Hey, good morning, good morning, good morning, David. Morning, George, Jason, Arturo. Good morning, everybody. Well, over $1 trillion in options expiring last Friday. Will it unclench the market? Well, it looks like it was starting to there on Thursday, Friday. We're getting a rally in NASDAQ. Then we got a little bit of pullback on Friday as we hit that options expiration, Opex. Remember, the monthly happens the third Friday every month. The Gamma Unclench was possibly the same size that we normally see on a quarterly. Now, big players, they tend to play in quarters and months, bigger time frame, halves of the year. They don't trade like weeklies and dailies like we do all the time. So you have to keep it in mind. Bigger money has to move slower. You can't just jump in and out of a $100 option with 30, 40, $100 million. Your position can't. The market's just not able to handle that kind of in and out every day or by the minute. So keep it in mind that when we're looking at bigger pictures, that weekly, that third weekly expiration tends to have a larger number of expiration, larger notional chunk of options that are played against stock positions and just against the market than you would see on the normal dailies or weeklies that we sometimes talk about here. All right, so all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here is intended to be informational, educational, and fun. Is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you need to hire and consult a financial advisor with a fiduciary duty to take care of you. So, hey, Goose, morning. Morning. All right. So, for those unknowing, unaware, I am doing a new product today. New product launch at 1 p.m. Eastern. It's called Crypto Unleashed. A little bit of tidbit for those that are out there. It'll be how to trade crypto without ever trading crypto. That's the new thing. So you never have to buy a coin. You never have to get a crypto wallet. You never have to do any of that stuff in this new thing that we're releasing today. So morning, Maggie. Morning, Francois. Good morning. And if you want to chat with me, the live stream is going. The chat is open. All you have to do is hit the subscribe button down there. Couple seconds later, live stream chat opens right up for you. And while you're at it, you might as well hit the alert with the little doodads because I go live every single morning that the market is open. At least I try to. So Tuesday, tomorrow, I'll be going live twice and hitting up the 30 minutes of awesome at 5 p.m. All right, morning monster list. Here we go. S&P. Trying to break out here. Is this going to be a breakout or a fake out right here? Now we have the resistance right up here at 4,300 coming across. This resistance, draw the box right here. Probably going to come up here and test this. More than likely, sooner or later, we're going to rally right up there and go test that. Now, that level is likely to lead to a bigger correction, possibly down all the way back down here. So be careful, watch out, know your parameters. I just think we should talk about that now because NASDAQ has already pushed above its August high. All right. Now, NASDAQ can push higher. It doesn't have to react negatively now. It can push higher. It can push all the way up here. We've got some levels. Levels. What kind of levels? Let's pull this down right here. We have this one, the 618 level, coming in about 14,345. Significantly above. But look, we topped out right back there. We topped out right there. Even though we spiked up, we came down, found a little bit of support resistance, then crushed down. And see, it's kind of funny because we couldn't go higher than that level and we couldn't go lower than this level until we busted down, bounced off, and then crushed out. Then we had trouble getting it back up in there. trouble getting back up there, went down for that lowest low in October, retest the bottom, popped up, retested the box, bounced back down, did a 618 retrace, and then pop up to the top of the box here, which is the bottom of this consolidation right here, right over here. Yeah, consolidation. Now we're into it. Right there, from all the way back in April last year, 13 months ago. What do I expect? Well, I expect we're going to stall out probably a little bit. The rally, the big high probability thing, this move up off this low, and then I was really expecting a move up when we did a sub little thing in there. We're done for now. We may go sideways. It may just turn sideways here. That may be the thing. Now, if the debt ceiling, if they play let's make a deal, we could see money flow into the market. We could see a big pop. But there's a risk sitting out there. See, the Treasury needs to refinance about $1.2 trillion of extraordinary measures. How do they do that? They sell T-bills. They go out to the market and they sell T-bills. Now, who buys them? Anybody in the chat? Who buys T-bills? Let me know what you think. We're going to go on for a second. Russell still hanging out down here. And can drop out. And China, central bank, foreigners, well, banks. A lot of banks buy treasury bills as their collateral. Now, looking at the banking industry, and bring up Russell in particular, our small banks have collateralized and used T-bills as the collateral. It gets sold out to the market, and then the government buys them back, through extraordinary measure, through the central bank and all that stuff. So we sell them out, people buy them, and then the central bank buys them back. And so what we have here is we have the regional banks crushing down on their collateral, getting messed up, right? They did the safe thing. They bought their treasuries, they bought their collateral from the government, and then all of a sudden their collateral, due to the rate raises of the central bank and the FOMC, their collateral was worth less than the face value. Uh-oh. That makes insolvent banks. Uh-oh. We dropped out. All right. So if we're going to do that more, what is the risk? If we suck out more liquidity and more out of the banking system, what's the possible effect to regional banks? They're only sitting on about $600 billion in liquidity right now, roughly, we're estimating. So if the Treasury tries to suck 1.2 trillion out, what happens here? Good grief. Alerts going off here. Turn that off. So what happens? Anybody? Anybody? Bueller? Bueller? Yeah, we have a liquidity problem. That's what happens. Yeah, the market could plunge if they need to pull that 1.2 trillion of liquidity out of things that they've been investing in. We could see a hit. We could also see these small banks that are already teetering on the brink of being under collateralized as more treasuries flood the market and become possibly worth even less. This jams it up even more. All right. That's the hazard. That's the unseen hazard. If they play let's make a deal, we could still blow up. All right. If we don't play let's make a deal, the narrative is that it's highly unlikely. Well, as to quote Obama, don't underestimate Joe's ability to F things up, right? So we could burn it down. We could burn it down on the front end. They don't play let's make a deal. We could burn it down on the back end. They do play let's make a deal, and the Treasury has to refinance. I don't know. Stay tuned. Keep coming to these, and we'll go through it. So right now we have, the $1 trillion Opex, gamma unclenching, possibly allowing volatility to come back into the market a little bit. We were very pinned right in here. Looking at the S&P futures, you can see we were very pinned, not hardly moving. We kind of pushed the limits there on Wednesday, Thursday, Friday. Gapping down at the open on Sunday, last night, rallying back up toward the close and just kind of opening flat. We're pretty flat here. Flat on NQ, flat on ES, flat on Russell. Not expecting a whole lot today necessarily. I do expect some increased volatility coming in. Now oil also just kind of sitting here. These things are not looking overly bullish. Gold looks like it's working on the bigger correction here. And Bitcoin also sitting down here. Now, one thing I did notice, I want to show you. Look at this right here. See this Bitcoin consolidation and pop? And then volatile action? Compare that right here. Consolidation, pop. Is Bitcoin actually leading the market right now and showing us what's about to come next? Was that consolidation of that pop what we just saw on NQ? And now we're in for some volatility and possibly a pullback. That's the big question in my mind right now. Is Bitcoin the one that's leading right now? And Russell could have been leading too. I mean, that could have been the pop and the giant pullback. And we could see that in NASDAQ. Now, AI has gotten really hot. NVIDIA approaching price to sales levels that Amazon had back in the .com bubble. So I caution you, if you're chasing after NVIDIA, to please be careful. If you're chasing after the AI play, it may be nearing being played out. Please be careful. Dollar continuing to test this roadmap line area. And we're going to see what happens. If we can break above it, we could possibly extend. If we don't, we're probably going down to that 90s area. Ultimately, we'll probably go down there anyway. Right now, we're hanging out just below the 618 retrace here, 103.97. Probably pop up there, hit that, and then maybe roll over. That'd be a classic 1, 2, or A, B, and third wave down for Elliott wave speakers people. All right, Green Hill. Let's talk about some stuff actually moving today. We got about 6 minutes for the open. That one popping up here. Look at that. Almost a double. 115%. I guess it is a double. Big, crazy pop. What do? Investment banks and brokers. No idea what the news is on that one today. Buyout deal. So there's no trade there with a buyout deal. And right back to the previous highs. So HEPA, Hepion Pharmaceuticals. Looks like going back to the roadmap line. VECT. Wow. Nice pop there. 35%. See, another pharmaceutical. Must have had some kind of drug news. Stock's slightly higher. Yeah, that's a crazy pop. Looks like another buyout. NBTX. Looks like, yeah, just hanging out right above the roadmap line. There's no real trade there. PACW, let's see, getting on a percent basis, that's a 10% pop, but it's just churning right down there at the bottom. It hasn't made anything that substantially looks like it may move up greatly. That was a measured bounce type setup. This is potentially an entry here for not a giant move, but let's see. Let's run the move. Could get up back into the $10, $12 area, which that's pretty fair from 6. I mean, that's almost a double. So kind of expecting to move back up into that area there on PACW. Now, once it does that, if it only gets up to about 9, it can turn down and go lower low very easily. If it gets up into this $10 to $12 area, it'll probably retrace back to about 9 and then go retest the roadmap line. PDCE, trying to break above those highs right there. Trying. Let's see. This one is, what do they do? Oil and gas. All right. Oil not looking super strong, but just churning in there at the roadmap line. Yeah. PDCE. SMR. Looks like it's still heading down the toilet. Losing a bunch of money. That one could pop on any kind of regulatory news, but I wouldn't chase that down in the toilet. At this point, 8 to 0 is not a long way. So there's not a huge opportunity for puts or short selling, in my opinion. So I would be careful. TCJH, Top King win. I don't even know what this is. Commercial services, not enough history to do anything. Moving on, GREC, or GREK, get my letters straight. Nice pop there. That's a huge pop for something like Greece. I would be very cautious on that one. A pop like that can definitely lead to a retrace. That's probably right up to the extension. Yep. 34.31 can be a resistance, 35.80 above that, and seeing one of these big retraces, highly likely off of one of those levels up there. Cold? Yeah. That must mean natural gas is going in the toilet again. Let's check out natural gas. Yep, getting a retrace. That was only a 3-wave move up. Be careful, we can go lower low. If it starts breaking down below 220, we're probably going lower low. 175, 150 are the targets down below on natural gas, which can make cold pop again and go back up to, you can make a higher high. YMM, nice little pop on earnings, but nothing super crazy, just beating on the top, beating on the bottom. Not huge, but that can rally back up to the roadmap line. Plug, that looks like a slow march to going out of business. Rain, and the market just, did it open? Looks like the market just opened. Nope, pre-market still. That one just not showing a pre-market print. MNK, looks like it's dropping off the pop, probably retrace back down. DK or DXR, big drop. Look at that. That's yikes. Yikes. Down here, if it can't hold support in this $9 area right in here, it's probably going lower low. I would be careful on something like that. And MGRM, not enough data to do anything. STA, Suncar, that looks like a volatile, scary thing going down the toilet. ICP, there's the market bell. ICP, gapping down, can go lower. Cocoa can definitely retrace. The Vital Water, like drinks have been pretty hot, but cocoa looks like it's going to come back to the roadmap line right there. These energy drinks, sports drinks, you know, Monster, Coke, Pepsi, Celsius Holdings. Yeah, that was an extension. Probably coming back to the roadmap line after that Monster extension. ZIM continues its downward trend. IRWD continues its downward trend. GSIT probably going to retrace some of that pop. Like, things can't go exponential like that without doing some retracing. Yeah, so bias for the day. I'm having trouble right now. We may go higher. S&P 500 has opportunity to go catch up. NQ, I feel like we could churn here, possibly get a retrace. We could go up and test that 618. So I would be cautiously bullish, very, very cautiously, and be ready for a pullback on a. Now that we get the debt ceiling deal, we'll probably pop like crazy and then run out of steam. It'll probably be like whoop and then right back down. So be freaking careful. We'll continue the conversation all day long in Discord. Updates as we go along. I'll give you levels and all sorts of things. But right now, nothing is clear, and we've unclinched the gamma. That can lead to increased volatility. The way volatility spikes on ES is on S&P 500 is to get pullbacks. Like dropping equals increased volatility for the most part. So we are down here around 17, which has been a historically low level since COVID. We were pushing, stretching out on SVXY, hitting almost to the target here, the first target, which was a bearish target. A bullish target would be 75. I don't know. We may get a pullback, and this thing pretty regularly has gotten pullbacks ever since COVID. Each one of these being somewhere in the neighborhood of 15 to 20% pullback with somewhat regularity ever since COVID. We've gone a little, we've gone a little ways here without getting one. Little ways being gone 48 bars, 48 days without getting any kind of pullback. That's probably about the length. How far, like some of the longest ones in here, not much more than 48 days. Like that one right there. Let's see. 63 days. I would be cautious. We may only have. We're probably on drop alert here on SVXY. So expecting some volatility to pick up. All right. That's kind of my bias, is looking for some sort of volatility to creep in the market. Sitting here cautiously. I am in like 60 or 70% cash in my smaller account, and just kind of waiting for opportunity to show up. Right now, closer to a top than a bottom. Very cautious. Very, very, very cautious. All right. Thanks for coming, everybody. We'll see you again tomorrow for Morning Monster. Remember, make sure you're subscribed. Make sure you hit the alerts. I go live about 9-10 every morning, talk about what's moving for the day, my bias for the day. And on Tuesdays at 5 p.m., I take your request for 30 minutes. So if that's what you're interested in, come join me tomorrow night, about 5 p.m. after the market close, Eastern time. And thanks for coming. We'll see you again later.